Hi guys, welcome back to my channel. My name is Andrea, and the last week during my trip to Switzerland, I bought more of the JD.com stock. I already own some shares before, which I bought in the autumn of last year. I'm still down on this purchase, and in this video I will tell you why the last week I decided to buy more JD shares. But first, quick background. JD is basically like Amazon over China. They run a huge retail platform with huge logistic networks. They are operating over 1.3 million square meters of warehouses in China and abroad. They have their own website. They have a full supply chain for themselves and third-party retailers, and they make all the logistic behind, and they now also run new businesses like food delivery or healthcare. So if we look on the numbers in the second quarter of this year, they grew their revenues by 22% year on year to almost 50 billion in the US dollars. The retail grew over 20%, and even the logistic and new businesses divisions like food delivery and healthcare are scaling. And if we look on these new businesses closer, we can see that the food delivery already hit 25 million daily orders. During their shopping festival, they got over 150,000 riders on board, and they integrated nicely this business with their retail and logistic networks. Long term, this could be a good growth driver, I think. What I also like about JD is their strong balance sheet. JD have around 22 billion in US dollar in net cash. That's really big. This means around a third of the market capitalization what they have is backed by cash today. Plus, they are actively buying back their own shares. They already bought around 2.8% of their stock this year, which give me also confidence. At today's prices, JD trades around 5 to 6 times enterprise value to EBITDA. When we compare this to their competition, the Alibaba is trading around 10 times and Amazon around 17 times. On the cash adjusted basis, JD look significantly undervalued, but maybe there is the reason why big investors don't want to purchase JD. So if we take a closer look on the risk what JD have, they actually posted a small operating loss at the group level, mainly because of heavy spending on food and delivery and the marketing. So their margins are under pressure. The net margin was like a minus 0.2%, but if we look on it on the non-GAAP basis, it was positive 0.3 if we exclude the stock compensation and heavy spending on their new businesses. And there's also JD is a retailer, and retail there is a big competition, especially in China. And of course, being a Chinese company, there's always macroeconomic and regulatory risk. So I am not expecting it will be set it and forget it stock. So consider this risk why I am still buying. For me, there is a good balance between risk and reward. The core retail business looks strong and it's also profitable. The logistic, they have a big moat. It's not easy to replace such a huge logistic network. The new businesses burn cash now, but they are growing fast, and the stock is trading at what I see as a discount valuation, especially with the law with this big cash position what they have. I think over the long run, there is a good upside potential with this stock. And yeah, I'm buying this for the next few years if possible. So this is my investment thesis in a nutshell. If you want me to make a deep dive on the JD, then write me in the comment. And if you find the value in this video, then please give me the thumbs up and subscribe for more content. See you. Bye.